Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of corporate filings. Ever wonder what is really going on behind those official documents? Well, today we're diving into BioLargo Incorporated's latest 10Q report, and let's just say things are interesting. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we dissect filings like this together. So, what do we have here? It is BioLargo's report for the quarter ending the 30th of September, 2025. They're trying to solve some pretty big environmental problems, from water contamination to air quality, and even developing new battery tech. But how are they doing financially? Let's find out. First up, the balance sheet. This is like a snapshot of what the company owns and owes. As of the 30th of September 2025, they had about $9.1 million in total assets. That sounds okay, but look closer. A big chunk of that, around $5.7 million, is current assets, meaning stuff they can turn into cash pretty quickly. But hold on, their cash itself is only about $4.5 million. That is a pretty tight cushion when you consider their liabilities. Now for the liabilities, what they owe, their current liabilities, the debts due soon, come in at over $3.4 million, and then there are the long-term liabilities, adding another $2.4 million. So they owe people and banks more than $5.8 million. That leaves them with a much smaller amount of actual stockholder equity than you might expect. Compare that to their total assets of $9.1 million, and you see that a significant portion of what they own is already earmarked for paying off debts. This immediately signals a need for careful financial management and likely explains why they've been actively seeking financing. It is also worth noting that their current liabilities are higher than their current assets, meaning they have less ready cash than they need to cover their immediate debts. This is commonly referred to as negative working capital and is a red flag for short-term financial health. Let's move on to the income statement, which tells us about their performance over time. For the 3 months ending the 30th of September 2025, they brought in just over $1.1 million in revenue. That is down significantly from last year. But here is the kicker. Their product revenue, which is usually a bigger contributor, took a massive hit, dropping by 80%. Their service revenue also saw a decrease. It seems like their main customer for those pet odor products, Proof, has become a major issue. The report highlights that this one customer used to make up a huge chunk of their revenue, but not anymore. And speaking of that Proof situation, the company had to take a massive credit loss expense of nearly $3.85 million this quarter. This means they basically wrote off a huge amount of money they were owed because they don't expect to get it back. This is directly linked to the legal battles with Proof Inc., which we'll touch on later. It is a stark reminder of the risks of relying heavily on a single client, especially when they're embroiled in a dispute. Scroll operating loss, all of this led to a big operating loss of over $7.1 million for the quarter. That is a lot, especially when you consider they lost only about $1 million in the same period last year. And when you strip away everything else, the net loss attributable to common shareholders for the quarter was nearly $6.5 million. That is a substantial amount for a company of this size. Now, let's look at the cash flow statement. This is super important because it shows where the cash is actually coming from or going to. For the 9 months ending the 30th of September 2025, they used over $6.7 million in operating activities. That means their day-to-day business operations are burning through cash. Where did they get the cash to keep things going then? Well, they raised over $7.2 million from financing activities, mainly by selling more of their common stock. This points to their reliance on external funding to stay afloat. It is important to remember that selling stock dilutes ownership for existing shareholders. They also have to deal with non-controlling interests, which is basically accounting for the parts of their subsidiaries they don't fully own. This adds another layer of complexity to their financial picture. Looking at the business itself, BioLargo has a pretty ambitious mission. They're working on technologies to tackle PFAS contamination, which are those nasty forever chemicals found in the environment. They're also developing medical products and a new battery technology. It sounds cutting edge, but as the financials show, bringing these innovations to market is extremely capital intensive. And here is where it gets serious. The company acknowledges that their current profits aren't enough to cover their operations for the rest of the year. They're expecting to need more money from investors to keep things going. This directly leads to what is called substantial doubt about our ability to continue as a going concern. In plain English, they're saying there is a real risk they might run out of money if they can't raise more, unless they significantly cut back on what they're doing. This is a major concern for investors. They've got a section on their accounting policies which is standard. They mention how they account for things like foreign currency and fair value. What stands out here is their approach to credit losses, where they estimate amounts that may not be collectible. Given the poof situation, this sounds like a very active and critical area for them. The accounts receivable section highlights that they had about $700,000 in expected credit losses at the end of September 2025. This figure is a direct result of the issues with poof, and here is the aha moment on customer concentration. For the 3 months ending the 30th of September 2025, one customer, Customer A, made up 35% of their revenue, but for the 9 months, it was a whopping 64%. This confirms our earlier suspicion about their heavy reliance on a few key clients. For accounts receivable, Customer B made up 38% of what was owed to them. This level of concentration is a significant risk. BioLargo has been selling its stock to Lincoln Park Capital Fund to raise money. This is a common practice for companies needing cash, but as mentioned, it means existing shareholders own a smaller piece of the company. Clyra Medical is a significant subsidiary where they don't own 100%. This non-controlling interest means they have to account for the profits and losses belonging to other shareholders of Clyra, adding complexity. This section is often where the latest drama unfolds. After the 30th of September, they continued selling stock to Lincoln Park. More critically, on the 11th of November 2025, BioLargo and Oni Environmental filed a lawsuit against Poof Inc. and claimed patent infringement, false advertising, and breach of contract. They are seeking a lot of money for unpaid royalties and product purchases. On top of that, Poof fired back with its own lawsuit against Oni Environmental. This legal back and forth is a huge distraction and a major risk factor. Here we get management's perspective. They attribute the revenue drop mainly to the Poof situation, which is no surprise. They talk about their ongoing efforts to commercialize their technologies in water treatment, batteries, and medical products. They acknowledge that their financial resources remain a challenge, which ties back to that going concern note. Looking at results of operations, it is more of the same story. Revenues are down significantly, largely due to the Poof contract ending and the legal disputes. The credit loss expense related to Poof is a huge number, nearly $4 million, directly impacting their bottom line. On Environmental, their odor control division moved from a profit to a significant loss, mainly because of the Poof issue and that credit loss. The other segments, like engineering and their battery division, are still in development and not generating significant revenue, leading to operating losses there too. This section reiterates the liquidity concerns. They're burning cash, relying on financing, and explicitly state there is doubt about their ability to continue operating as a business as usual. This is not a minor statement, it is a fundamental warning. And then there is the internal controls. Management admits they have a material weakness in their internal controls regarding financial statement closing. Basically, they don't have the robust systems or enough staff to ensure everything is perfectly accurate and controlled. This is common in smaller growing companies, but it adds another layer of risk. The exhibit index is a list of all the supporting documents like contracts and agreements. It gives you a peek into the company's history and various deals. Okay, so what is the big picture here? BioLargo has some really interesting, potentially game-changing technologies. The problem is bringing those to market is incredibly expensive, and they're clearly struggling to generate enough revenue to cover their costs. The Poof situation has been a massive financial blow, both in terms of lost revenue and now with a large credit loss and ongoing legal battles. This is a company that is heavily reliant on future funding and successful commercialization of its advanced technologies. They are in a high reward situation. The energy and environmental sectors are certainly growing, and if their technologies prove successful, they could be big players. But the immediate financial challenges and the ongoing litigation are significant hurdles. The going concern note is the most pressing issue. They need to find a way to either significantly increase revenue or secure substantial additional funding to survive and execute their ambitious plans. For investors, this means weighing the potential of their innovative technologies against the very real financial risks and the uncertainties surrounding their legal battles. Alright? That is our breakdown of BioLargo's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.